Global smartphone shipments slumped in the fourth quarter of 2022, that is, according to market research firm IDC. Though the holiday season is usually a busy shopping period, inflation and economic uncertainty weighed heavily on consumer demand, resulting in an over 18% year-over-year decline. That's the largest dip ever seen in a single quarter. Yahoo Finance's Dan Howley has all the details. He joins us here on set. Dan, what do we know?
Yeah, so this 18.3% year-over-year decline, that means that the number of units shipped came out to about 300.3 million in Q4. This is especially troubling just because this is usually the time of year when people are spending big on electronics, smartphones. You usually see big sales. And so you would imagine that these companies would then have, a good quarter, but clearly we're seeing pullback based on that. Shipments dropped 11% on the year. That's the lowest annual shipment total that IDC has seen since 2013. That was 1.21 billion units. And you can see here some of the top three. Apple dropped 14.9%. Samsung dropped 15.6%. Apple's still the leader there. And then Xiaomi, they dropped 26.3%. It's telling. Because we've also seen this in the PC market. I believe, according to Gartner, I actually have the information here, they saw a massive decline, 28.5% decline in Q4 worldwide PC shipments. That was the biggest decline since they started tracking in the mid-1990s. So these are just, it's not to say that, we're seeing the actual shipments revert to 1990s numbers. It's that the declines are so great because we had seen such huge numbers of devices being shipped out. The demand was there, and now it's just not. Look, people don't buy smartphones like they used to. It's not like every 2 years I go into a Verizon or, T-Mobile. I almost said Sprint. They don't even exist anymore. One of those stores, and you pick up a new phone. It's, those plans have largely gone away, so you buy a phone every 5 years, every 4 years. So it becomes more difficult for these companies to keep up this pace. But what we saw last year was just people needed new devices. They wanted new devices. The pandemic was not fun, and they wanted to get something good. Now, with all the economic uncertainty, they're definitely pulling back. So you can kind of take this for what it's worth as far as the exact numbers. Apple reports next week. We'll see what that means for iPhone sales, but the projections are for not a fantastic quarter for Apple.
And the PC numbers that you mentioned are more relevant probably for a company that's reporting after the close. That is Intel, right? Because I don't think of it as a smartphone chip maker, really. It's more other
they tried,
types
not very good.
It's more other types of devices. So what are we looking for from Intel?
Yeah, so for Intel, we're looking at potential revenue of $14.4 billion expected. That's down from $19.5 billion in Q4 last year. Adjusted EPS, that's expected to be at 19 cents. Down from $1.09 last year. And it's just, the hits just kind of keep coming. The only place I see a potential jump is their network and edge business. That could be $2.2 billion versus $1.1 billion last year. But client computing, that's people that buy, PCs, things along those lines, $7.4 billion expected versus $10.1 last year. And then the data center and AI, which is really where investors want to see growth, that's expected to be around $4 billion versus $7.3 last year. So it's not looking good for Intel. I had their numbers up a few minutes ago. For the year, the last 12 months, they're down 41%. We were looking at NVIDIA along those lines being that bad. They're only down 12% now at this point. Qualcomm, 19%, AMD, 32%. So, you can see that Intel still really hurting there, and they're trying to turn the ship around. They're trying to build those fabs. They're making deals to have other companies build at their fabs, but it doesn't seem to be enticing investors very much with the poor performance.